Okay, I'm going to talk through homework chapter 1-1. For the first few problems, I'm actually not going to walk through each individual one. I'm just going to talk a little bit about the concepts of direct and indirect costs. With direct costs, it means you can trace that cost directly back to whatever the cost object is. So if I were talking about units of production, and that is my cost object, then direct materials, well, that's direct. I can trace that directly back to a unit. Direct labor, that is also direct. I can trace that directly back to a unit of production. Manufacturing overhead, that is by definition indirect cost. So for units of production, that is going to be an indirect cost. In your question one, they're talking about hospitals and patients and the nurses and their wages. So you need to first look at what is the cost object. Their example is catered food served to the patients. And the cost, so that's the cost. The cost object, so what would be right here, is a individual patient. So they keep records of meals and they can trace that directly back to the patient it is served to. So that is a direct cost to a particular patient. So as you go through question one, just look at what is the cost object and then look at the cost and see, can this be directly connected back to the cost object itself? Question two. Yeah, we may have to go through this one. So question two, see if I can increase this a little bit. Okay, so you've got a company and its relevant range of production. So I've just taken this information directly from the book and put it into my Excel so that I can reference these numbers. So the range of production is 15,000 to 19,000 units. When it produces and sells 17,000 units, its average cost per unit are as follows. So what that means is they have taken 17,000 units and figured out that average cost per unit at the 17,000 mark is $7.60, etc. Where you're talking about variable expenses like direct materials and direct labor and variable manufacturing overhead, these per unit costs then will stay the same. But the total will change when your number of units changes. For any fixed cost, this multiplying this individual unit cost by this original 17,000 units will get you back to the number that they started with. So if I took 17,000 and times it by $5.60, that tells me they started off with a fixed manufacturing overhead cost of $95,200. Another side note is in this book, I will have different numbers than you, but you will be able to figure things out in the same process. Just remember that fixed expenses, the total, it's fixed. It's like your mortgage or your rent. It's the same every single month. Okay, so in required one, we're going to assume the cost object is units of production. So we need our direct material cost per unit, which I just copied from right there. The direct labor cost per unit, which is copied from right there. And I believe this is how you input it for required one into the book. And it adds that up for you in the book. And then we want to know how many units are produced and sold. Well, right here in A, it tells me 17,000 units. So look in your problem right here, and that's the number you put here for the number of units produced and sold. And then they figure this out for you, but essentially what they have done is taken the units and multiplied it by the direct cost per unit of the direct material and the direct labor. Then the variable manufacturing overhead per unit, which is right there. The fixed manufacturing overhead per unit is right here. Indirect, so right, fixed manufacturing. And the reason this works is this 17,000 units is the same 17,000 units that they use to make these numbers. So again, variable manufacturing overhead, that is indirect, and fixed manufacturing overhead, that is also an indirect cost. So that's why those are the indirect costs of manufacturing. It's those two added together. And then it's that same 17,000 units for B, same number of units. And then, so you just input those units there, and then the book multiplies it for you. The total indirect times the number of units equals the total indirect manufacturing cost. Okay, now in question 2, now our cost object is the manufacturing department. So right, the first one, the cost object was the units of production, which I showed you here. So now the manufacturing department is our cost object. Direct materials are a direct cost, direct labor is a direct cost, and manufacturing overhead is a direct cost to the entire department. Where if you notice when the cost object was units of production, manufacturing overhead is an indirect cost. Okay, so back to here. So these are all direct costs of the department. So our total indirect cost is actually going to be 0. And again, for these others, these are just those same per unit costs that we pulled down from above. The 17,000 units are the same 17,000 units that the chart was made from. So I can use these individually even for the fixed. So you input each of those individually. The book adds it up for you. Then the number of units is right here for 17,000, and the book multiplies that for you. And then again, for required 2, the total indirect costs are 0 because our cost object is the manufacturing department, and all of these are direct to the department. Okay. So question 3 is telling us, required 3, sorry. We're still in question 2, required 3. Assume the cost object is the company's various sales representatives. Okay, so for our sales representatives, that's our cost object. Sales commissions are direct, right? Because each salesman, that can be directly traced back to them because they want to be paid the commission for the sale. Compensation is also a direct cost because they want to be directly compensated for that sale. Advertising is our indirect cost when our cost object is the sales representatives. Okay, so sales commission, per unit. Let me split my, sorry. Okay, so right up here, again, this was directly from the book. Now my sales commissions per unit is at $1.60. And we're selling 17,000 units again. So that's what goes there. So they multiply that for you. Basically, it's the number of units sold times the sales commission per unit. That gives you the total sales commission. The fixed portion of the sales representative, where did that come from? Okay, so I need to figure out my fixed selling expense, which was the $4.10 times the 17,000 units. And then they tell me the company spent $52,700 of its total fixed expenses on advertising, and the remainder of the total fixed selling expense is comprised of the fixed portion of the company's sales representative's compensation. So this fixed selling expense is the advertising plus the compensation. So if I know the advertising and I figured out the total fix by multiplying, then I just need to subtract advertising from the total, and what's left over, they tell me, is the fixed portion of the sales representative's compensation. So I just subtract. They figure this out for you. It's adding the sales commission and the compensation is the total direct selling expense. And then advertising is the total indirect selling expense, because that is the only indirect for the manufacturing department. So just remember, when the cost object, oh, whoops, that's not right. Sorry. This should be sales. When the cost object is our sales representatives, then the sales commission and the compensation are direct, and the advertising is indirect. Okay, that is everything on question 2. So question 3, you're just again going to decide whether it's a direct material or an indirect material, just based on what the cost object is. And those are pretty easy to figure out. Okay, on question 4, they want to know what are period costs and what are product costs. So if you look at this chart, this is actually, I took this straight out of the book. So we have our costs, and we have our balance sheet, and we have our income statement. So this is showing you anything right here are product costs. So raw materials purchases, direct labor, manufacturing overhead. These product costs go into the balance sheet in raw materials, and this goes in work in process, and it all moves to finished goods inventory before it moves into the income statement as cost of goods sold. So that's just showing you the labels assigned to these numbers and how they flow through the balance sheet into the income statement. So those are product costs. So as you are looking in question 4, evaluate, is what they're listing one of these things. Period costs are selling and administrative, and they do not flow through the balance sheet. They go straight to the income statement as selling and administrative expenses. So as you are reading through those, you are then looking for anything that falls under selling and administrative. That is a period cost. So that should help you figure out question 4. Okay, question 5 is a little tricky, but I'm going to show you how to walk through it and hopefully help it make a little more sense. For me, it helped me to make the T accounts and have this the numbers go into the T accounts to help me figure out what the accounts would appear on the balance sheet or on the income statement as. And they want raw materials, work in process, finished goods, cost of goods sold, and selling expenses. So this is a visual to help you figure out what these ending balances will be. Okay, so question 5. The Devon Motor Company produces automobiles. On April 1st, the company had no beginning inventory, and it purchased 5,740 batteries, okay, $5,740 at a cost of $65 per battery. So I have that cost right there. It withdrew 5,300 batteries. And again, you're going to have different numbers than me, but you should be able to work the same process to come up with the correct answers. So it withdrew 5,300 batteries from the storeroom. Of these, 100 were used to replace batteries in cars being used by the company's traveling sales staff. So that's the only clue that you're going to get, that those 100 batteries are going to be part of your selling expense. So I'm going to put that right there. The remaining 5,200 batteries withdrawn from the storeroom were placed in cars being produced by the company. Okay, so 5,200, right? That's the withdrawn 5,300 minus the 100. The 5,200 were put into the product or the cars being produced by the company. Of the cars in production during April, 90% were completed and transferred from work in process to finished goods. Of the cars completed during the month, 30% were unsold at April 30th. So here's my completed 90%. I just put these here so I can reference them then, because here's my 5,200 product, cars. And so to figure out the ones that were finished, I'm going to take that times the 90%. That's how many were completed. So I don't know how many were sold, but I do know how many were unsold. And it's the finished times 30% are unsold. Okay, so now I know this many were finished, this many were not sold. So the number that were sold would be the finished minus the unsold. Okay, so again, these are just units. Now I've got to assign a cost. So I'm going to take, and I'm going to reference the number of units purchased times the per unit cost, and I'm going to anchor this cell, because when I drag this formula down, I do not want this cell to move, but I want the blue cell to move down. And again, you can either, I'm on a regular computer, you can just push F4, or you can physically put in dollar signs in front of the column and the row markers, and then that will keep that cell anchored. Okay, so now there's my formula. There's this little green box here in the corner, and when I hover my cursor over, it turns into the smaller plus sign. I can left click and drag that formula down, and then it takes and multiplies. See how the blue box moved and the red box stayed the same because I anchored it. So now I have all of my costs. So I want to show you this purchase cost that goes into raw materials, and then the withdrawn that comes out of raw materials. So the total for raw materials then is the purchased minus the withdrawn. And again, it's not the units, it's the cost, because we're talking T accounts, so we have to have it in dollars. So required 1A, raw materials, is 28,600. Now, work in process. That is the amount put into the product. Then the things that go out of work in process are the amount that for the finished product. So again, what came in gets subtracted. You subtract what goes out And that gives you the balance of work in process, which is 1B, 33,800. Okay, finished goods. Again, that's our finished, right? They told us it was finished. And then what got sold comes out of finished goods. And it becomes the cost of goods sold there. So our balance for finished goods is what work in process that came in when it was finished, and then the cost of goods sold that went out when they were sold. And so that leaves me with a balance of 91,260. So therefore, my cost of goods sold is going to be that 212,940. And the only thing left is that selling expense, right? That was what the company used. Where did it tell me that? 100 batteries were used by the company's traveling sales staff. So that is a selling expense. And so that selling expense is 6,500. I hope this helps you.